Hey everyone, welcome to the Juniper Links Accounting channel. My name is Caroline and today we're going to have a look at the UK income tax rates for 2021-22. So before we get started with the video, I'd just like to mention that we do have an accountancy service for limited companies, so if you're running your own business and you need an accountant, then feel free to get in touch with us. The details are in the comments down below, and without further delay, let's get started with the video. Okay, we are in my computer and we can get started with the video. Okay, so first up we've got the UK tax allowances. And these are allowances that you can get depending on your other income in some cases, for example the personal allowance, without any tax. So this is money you can earn without paying taxes. So you've got a personal allowance, everyone gets access to this if your income is under £100,000 for the year. And I'll get into this a little bit later, but basically you start to lose it after that amount of money, so you won't get your full personal allowance. The dividend allowance is £2,000. You get this regardless of your other income. The capital gains tax-free allowance is £12,300, so this hasn't changed, and you get this regardless of your other income as well. Okay, let's jump into some of the tax rates and thresholds. So again, the personal allowance with no tax runs from 0 to 12,570. The basic rate obviously starts £1 higher than that and ends at 50,270. And the taxes on this is 20% for income tax, and this is generally earned income, so like salary, self-employed income, income from property, things like that. And then we've got 7.5% for the dividend tax. And just a quick note, when you are working out a combination of salary and dividends, salary is always added first to the income tax calculation and dividends are added after. So dividends will always be taxed in the higher rates first rather than the salary. And then we've got the higher rate tax threshold, which will take us up to £150,000. And here we've got 40% income tax and 32.5% dividend tax. Then the additional rate basically covers anything after £150,000, and that's 45% income tax and 38.1% dividend tax. And after £100,000, like I mentioned, so this is a big one, you would start losing your personal allowance. So by about £125,000, you would basically have no personal allowance whatsoever, and I will give you an example of how that gets worked out. And here we are with the tax rates and, tax thresholds when your income is over £125,000. Now, it's more like £125,140, but we'll just call it 125 for simplicity. So first you got your personal allowance, again, 0. So when you lose your personal allowance, it's just 0. And then the basic rate, you get only the difference between that 12,571 and the 50,270 as the lower rate. So you still get the same amount of money within the lower rate, just minus your personal allowance. So as you can see, this kind of means that that personal allowance is not going to be taxed in the higher thresholds because it has to go somewhere. So you get up to 37,700 as the basic rate at 20% and 7.5% for dividends. And the higher rate you have from 37,700 up to £150,000 would be the 40% bracket for income tax and 32.5% for dividend tax. And then you've got the additional rate. So anything after 150,000, you still have 45% on income tax and 38.1% on dividend tax. So everything else generally stays the same. Apart from when you remove the personal allowance, it doesn't actually mean that you can earn up to £50,000 in the lower rate. What it actually means is that you can receive up to £37,700 in the lower rate, and then everything else gets taxed in the higher or additional rate tax brackets. Alright, and next up we've got Scottish rates and thresholds. So as you can see, there's quite a few more here going on. I will try to go through these quickly. So you get the same exact personal allowance with no tax up to that £12,570. And then you have a starter rate up to 14,700, let's call it, but it's a little bit less than that. 19% income tax on that Just to note that dividends tax follows standard UK thresholds and rates. The basic rate at 20% goes up to 25,300, which is 20%. Intermediate rate, it goes from the 25,297 to 43,662, and that goes up by another 1%. So they just kind of made a tiered system here. And you'll notice the higher rate starts sooner as well at £43,663, and also the higher rate taxes are increased by another 1%. So up to 150k is 41% from 43,600 rather than 50,270. And the additional rate again is 1% higher than the UK rates at 46% tax. Okay, so what happens when you lose your personal allowance when you're a Scottish taxpayer? So here are the thresholds when you earn over £125,000 worth of income. So you've got the starter rates of 0 to £2,097 at 19%. Then you can earn between £2,098 and £12,726 at 20% taxes. The intermediate rate then goes to 12,700 up to 31,100, and that would be 21%. And the higher rate in this case starts at £31,100 up to 150,000, and that's 41% income tax again. So the UK was 37,700 for the higher rate starting point. In Scotland is 31,093. And the additional rate, exactly the same, £150,000 or more at 46% income tax. Okay, let's touch on capital gains tax. So, of course, we've got the tax-free allowance of 0 to £12,300, and this doesn't change based on your other income. It won't get removed if you earn a certain amount of capital gains. It's just going to be in there no matter what. And of course, this could change in the future, so do check the capital gains for the tax year you're looking at before going ahead with deciding how much tax you're going to pay. Okay, for standard capital gains, the basic rate is 10%. So this is when you are a lower rate taxpayer, and based on your other income plus the capital gains you receive, you wouldn't go into the higher rate. Then you've got 10% tax on anything over £12,300. So let's say you had a £30,000 salary and you're a UK taxpayer who has earned £17,300 in capital gains. So if we add these two together, we get £47,300, which is under the higher rate tax threshold, and that means you would pay 10% on the £5,000 capital gains over the tax-free allowance. And if the capital gains are reported where you've already got income up to the higher rate tax threshold, so anything else will be in the higher rate, then you have 20% tax on those gains. And for property, we've got different tax rates on capital gains. So it's 18% in the basic rate and 28% in the higher or additional rate. Rates are determined from other income received during the tax year. Yes, this is true. However, the capital gains that take income over £100,000 do not affect your personal allowance for the year. So that's just kind of the benefit of receiving capital gains compared to earned income. It is a little bit better in terms of the tax rates and allowances that you get. Okay, moving on to national insurance thresholds. So we've got the employees' national insurance first, and these are just the weekly and monthly thresholds. This is like what standard employees would see in the tax year. So the lower earnings limit is £120 per week or £520 per month. There are no national insurance deductions up to this amount, or after this amount up to the next threshold, which is the primary threshold. So over this £120 per week or £520 per month, you start receiving a qualifying year for state pension and benefits. However, no national insurance deductions are made from you. Then we've got the primary threshold, which is £184 per week or £797 per month. And this one, so once you start earning over these two amounts here, there would be 12% national insurance deductions up to the upper earnings limit. So this upper earnings limit is actually right here. So that one is £967 per week or £4,189 per month, and that drops down to 2% on further income. So you're going to be paying the most between basically £797 and £4,189 per month. These are going to be where you have 12% national insurance deductions, and then on any income after this 4,189, you would have 2% national insurance. So it does drop off once you start earning a higher amount. And then we've got the employer's national insurance, which is called the secondary threshold. If you ever look on HMRC's website, I've actually got links to that in the description below. But up to £170 per week or £737 per month, you don't have to actually pay any employer's national insurance. And anything after these thresholds would be 13.8%. This one does not actually drop off after a certain amount. It's always just the flat 13.8%. And next up, we've got national insurance thresholds for directors. And with company directors, you can use the annual threshold. So you don't actually start getting deductions until your salary reaches these thresholds. So for employees' national insurance, director can earn up to £6,240 with no deductions. However, if you earn below this, you do not get a qualifying year for state pension or benefits. So you have to earn over this threshold. Then you've got the primary threshold, which starts from £9,567. And this one again is 12%, so the rates are exactly the same. It's just that you can use these annual figures instead. So you can be receiving monthly salary every single month. So let's say you earn £800 a month salary, and then you earn £800 a month salary, and you keep earning this amount until you reach this £9,568. And then after that, all of your earnings would have 12% national insurance deductions. So once you have paid the 12% up to £50,270, any more salary after that would have 2% national insurance deductions. And for the employer's national insurance, or the secondary threshold, it's £8,840 for the 2021-22 tax year. And again, it's the same exact rate at 13.8%. Okay, and here are some helpful links which are also in the description below, so feel free to check them out. This one is for income tax rates in the UK. That one's the Scottish tax rates. This is capital gains tax rates, so you can have a look at what those are. And then you've got some more in detail guidance for rates and thresholds for employers, for national insurance and things like that. So you can kind of see where those thresholds are, but it's basically what I've just put in this video. Feel free to look over everything that you need to work out how much tax and national insurance you'll be paying for the new 2021-22 tax year. And that pretty much wraps up my video on the income tax rates for 2021-22. If you do have any questions about what we just covered, then feel free to drop them in the comment section down below, and we'll get back to you as soon as possible. If you liked the video, then feel free to click that thumbs up button so we know that we did a good job. And if you want to see more content like this, then do consider subscribing to the channel and click the notification bell so you can get notified every time we upload a new video. Thank you so much for watching till the end, and I hope you have an amazing day.